The Dow traded just above the T-line today, traded very indecisively. But that indecisiveness kind of tells you there's really no strong force selling once it got back down here to the T-line, which gives you the prospect of kind of a J-hook pattern, which your next wave should be up here, which would coincide with coming up to the top of the channel. There's added confirmation that there isn't any selling right now in the markets because you can see that even though the NASDAQ opened a little bit lower and traded lower, it finally closed up at near the high end of its range above the T-line. Very simple rule. As long as they're trading above the T-line, the probabilities of the uptrend continuing are extremely good. But a more relevant indicator is the transportation index. It's doing a bobble breakout. A bobble breakout comes up, hits the resistance level at the 50-day moving average. You can see the bearish harami telling us that the buying had stopped. They pulled back to the 200 and the T-line area. The second time they come up through and go through it, that's a bobble breakout. That's telling you this time they've gone through, and it's also setting up as a J-hook pattern. If you took this 50-day moving average out, you basically have a J-hook pattern. A bobble pattern is just much easier to identify because you can see where the resistance is, you can see where the support is, and you know what the prognosis will be if it breaks through. Usually a lot more upside. Knowing that there isn't any great selling going on in the markets, that allows identifying the patterns, like the fry pan bottom as our recommendation on HEAR, has continued to move up steadily, even though the market's just kind of sluggish. Remember, the patterns are the development of investor sentiment, accumulating either bullish or bearish sentiment. The fry pan bottom obviously is the accumulation of bullish sentiment. So even if the market is sluggish or even heading down, the pattern is already the implication of investor sentiment building up. So it's not going to be as, influenced by the overall market because something's already building up in this individual stock. Having the ability to analyze commodities or futures, for example, gold is having a hard time getting up above the T-line. Again, the simple T-line rules. As long as you're below the T-line, the probabilities are extremely strong that you're still heading in a downward direction. What reverses a downward direction? Witnessing a candlestick buy signal and a close back up above the T-line. So knowing that there's no buying in the gold area, that allows you to take advantage of maybe short positions in gold stocks or gold ETFs. And things that take very simple analysis as far as a trend are things like Tesla. Notice kind of the little wedge formation, but also that they could never get it back up above the T-line. Today's gap down below this bottom support level implies the bears are winning. The probabilities of more downside is that much greater. All candlestick analysis does is analyze what happens in human nature, the way human nature has reacted for the last 400 years, and will probably react for the next 400 years. Candlestick analysis merely puts the probabilities of knowing what direction a price move is going to go with extremely high favorable odds to the candlestick investor. That'll be it. We'll see you in the chat rooms.